good, ladies and gentlemen? I hope that didn't scare you. Mad love and respect for passing through to today's video update, trying to get this video out to you before the New York market opens. Now we've seen a little bit of blood on the street. I don't sound too good. My voice is on its way out. I'm not feeling too well, but it's all good, ladies and gentlemen. We'll still bring you that fire. Now, we've had some very interesting bouts of information. JP Morgan, Goldman Sachs, Bank of America, they're all calling for the idea of a Santa rally and that things were looking kind of optimistic. Only yesterday they were talking about the idea that the markets themselves are kind of absorbing the idea of what's going on around the world and that it might actually be okay going in towards the end of the year, towards the start of the new year. Now that's all flipped on its back, ladies and gentlemen. The same people that were calling for a nice little market upturn are now saying that we got bumpy times ahead. So what do we mean by bumpy times ahead? Listen, I'm not giving you no FUD, and I will keep saying this. I'm telling you what the big cats are trying to tell the world. Now, do we have the statistics to back that up? Yes, we do. The yields are inverted at their lowest point in 22 years. When the yields are inverted, it means what? Short-term interest. So during a bearish market, any moves to the upside won't be sustained for long. We've had the NASDAQ taking absolute phenomenal moves to the downside to only recover specific vectors in the chart. And whenever you see this sort of scenario happening with the hybrid system, now if you are new to the channel, you haven't got the hybrid system, I'll be showing you exactly how to get hold of it. It is free of charge. We'll get to that in a bit. But when you see assets across the board clearly demonstrating the idea that they're not favoring the longer term, any moves up will be met with fast moves back down. Now, we've had a little bit of success with the dominance of the dollar. Now, as of play right now, we've seen Euro move up and the Dixie making a move to the downside. Now, listen, we do have the FOMC coming out next week. Everything right now is macro-driven. Bitcoin is macro-driven. NASDAQ, macro-driven. Dow Jones, macro-driven. Euro, macro-driven. Everything is based on news. And like we said yesterday, bad news is good news because it means that the Fed's policy is working at getting inflation down. But now we're stepping into the era of bad news is now bad news. Okay? Now they are projecting that 2023 ain't looking so good, but they're hoping that December is going to see a nice little move to the upside and assets will kind of alleviate the pressure of the market downturn. But that's not the case, ladies and gentlemen. It looks like they're going to sustain this play to the downside and maybe NASDAQ, S&P are going to go down and test their lows for the year. Let's have a conversation, ladies and gentlemen. Let's get to the charts and break it down. Okay, so Bitcoin decided to take a little bit of a tumble yesterday. Now, what's got my attention, okay, was the fact that yesterday Bitcoin did nothing. Now, there is something that you need to take into consideration with the idea of buying and selling, all right? NASDAQ took a tumble, Dixie moved to the upside. S&P took a tumble, okay? Euro was consolidating, did take a little bit of a tumble to the downside, but the general pressure of the marketplace was favoring lower prices. Why did Bitcoin not move? I'll explain. Well, maybe not so much the guaranteed reason why it didn't move, but play with this idea for a minute. Look at the chart. Inside of this zone right here, ladies and gentlemen, you have got the psychological range. The psychological range is the point where they build positions. Look at the start of the week. It's exactly what they did. Mr. Market Maker decided to run his shorts to the upside. He got the interest from traders because they believed that price was going higher because the bottom is in. No, ladies and gentlemen. He moves away aggressively from the psychological ranges, giving us the clue that he's getting ready to build his shorts. Okay? When he came back down into this zone, this is where they started to do exactly the same work. They've done the damage up here. Okay? Now, they brought it back into this zone. They did recover some of the vector candle inside of this zone right here, and then they took the tumble to the downside. But if you go into the 1 hour time frame, by the principle of the hybrid system, we understand that when you start seeing the collective of vectors like these stopping volume candles, these candlesticks right here, to the traditional technical analysts, they see these, okay, as rejecting the lows. There is no rejection. It's grabbing liquidity. The retail trader would see this and say, this is a great buying opportunity. Happy days. I'm going to go long because I believe it's going to break out to the upside. Whether it's a wedge or whatever they do, they call it a wedge where it's coming down right here. I can't even draw it. One right there. And then they've got this thing here. Or is it a bearish pennant flag, whatever? And the idea is that if it can consolidate inside of this zone, it's going to break out from that region. Happy days. Mr. Market Maker's got the retail trader trapped with his pictures on the chart. What happened next? Mr. Market Maker marks up the shorts to the upside, okay? He traps the trader with the belief that they're trading this structure. Bitcoin's got support at the 200 EMA. Happy days. If Bitcoin can break above the 50 EMA, I'm going long. And you know, Mr. Retail Trader, he actually did take a long because the interest came in. That's the best time for Mr. Market Maker to mark up his shorts at the highest possible point. Why? Because that is where you buy, he sells. Look what then happened. Tokyo starts to party and initiates a move to the upside, rip back down. Those retail traders, when they went long, they paid the price. Their liquidations were sat inside of this zone. Let's have a look at Bitcoin on the high block itself to understand the liquidity. Here we go. That liquidity down at 16,700, waiting to be eaten. They took it. Because there was not many interest up here at the shorts. There were more people favoring higher prices than there were lower prices. That move last night and the consolidation from yesterday's New York session brought price to commit traders to the upside. $4.87 billion worth of long liquidations disappears. So now all we're looking for is the next point in the chart that Mr. Market Maker is going to make the retail trader believe that the shorts are going to come into play. So now he's going to then work his way back up to try and induce that and take advantage of those traders. He might do it to the 100x traders, but you've got to be very careful when you're trading in these certain environments. We are macro driven. Go back into the chart. Bitcoin right now seems to be coming back up to recover the vector candle. We are stepping slowly into the psychological region. Will we have another move to the downside? Well, looking at assets across the board, look at Dixie. Dixie has been coming down and it is come and into the previous recovery of the vector candle right here. Towards the end of the video, I'm going to show you how I projected all of this play, especially in Bitcoin. Now that Dixie has done this move right here, ladies and gentlemen, one would assume that they are closing some net positions with the idea that they're going to try and come back up. We're waiting to see if this is sustained. New York will be opening in just shy of an hour and 10 minutes. Now, I've said it. I would prefer that Bitcoin takes an absolute tumble to the downside and then, who's disturbing me now? And then make the move up on the idea that the FOMC is going to welcome a good scenario. But that might not be the case. If Bitcoin and assets across the board hold their lows, so if we go to NASDAQ and we see that NASDAQ, look, it's narrowly getting ready to come into that vector candle region. That is a dream come true. But if they recover all of this before FOMC, then we would assume that they would come back down towards this area here. So we would then hypothetically assume this journey on the NASDAQ, FOMC, consolidate, and then we will know exactly where we stand with the Fed, because the Fed isn't going to say something that the markets won't like, because we already know that the Fed has got a stubborn issue with the labor market, it's got a stubborn issue with the inflation, and we're just waiting for them to categorize the idea that we are heading into a recession. If all the big banks, if all the hedge fund managers are all calling for a recession and a bumpy times ahead, quote, bumpy times ahead, why is the Fed sat there thinking that it's going to achieve a soft landing? Now, a soft landing means that they're going to be applying their policies to reduce inflation down. Now, hopefully the CPI data that comes out next week shows that inflation is coming down. The narrative will switch. Everyone will be like, wow, it looks like we're going to actually have a soft landing and the Fed's done its job. But the Fed's been wrong many a times about inflation. That's why they aggressively increased the interest rates significantly over the last few months. going into the yields and the dollar. The bond market itself, although the yields are going down and the 10-year is trading higher, they are all waiting because right now it's macro driven, which means that if more participants start to come to the idea that things ain't looking so good, then everything is going to take the tumble. The bonds would need to start dropping, which would in essence increase the yields, which would then mean that NASDAQ, S&P, and all assets against the US dollar will drop. Then we will then see the recovery of this vector candle coming into play right here with the dollar dominance, and we would then expect dollar to start climbing back up towards the regions of the 105.71 and the 106 zone. Okay? Going back into Bitcoin, ladies and gentlemen, you can see that Bitcoin usually has this tendency to mark down, to retrace, to continue lower. Let's dive into the understanding of what is actually happening inside of this area. Here we have EXO charts. Now, Bitcoin is trading below its daily VWAP right here, all right? And down below here, you can see if this is the zone that Bitcoin retraces back up from, all right? Notice that we have had two successive delta pushes to the downside, encouraging the traders to do what? Go short. Perfect place to grab their interest because that's what you are told. You go short when price is going down. Do you? No, you do not go short when price goes down. This is an example of why you don't go short when price goes down, because you're not going to sell a valuable asset at the lowest price. You're going to sell it from the highest price. So you only mark up your shorts when price is moving. You've got to be very careful. In this instance, Bitcoin did make the move to the upside. It carried on ever so slightly and then decided to roll down. What if you're building shorts and this happens to you? This is where structure and understanding of the behavior of the market is going to give you an understanding of how much liquidity you're going to commit inside of these zones. Don't go all out and put your entry short from here because price is rising and then you sit through a drawdown. You're having to add to your margin because you don't want to risk getting liquidated. No. If you're going to do it like that, ladies and gentlemen, hypothetically, if you're going to build positions, you need to build positions at the point where it's most aggressive, because you are then improving the chances of a retrace back down, because those aggressive moves or the speed of the candles are where Mr. Market Maker is getting ready to do his business. The clues are left with the lack of the vector candle closing at the highest point. If you notice the stop candles right there, you see that wick and you see that wick? Those are clues that the actual move itself is designed to trap traders in. Look at the vector candle that has been left behind. Those are also other clues. So whether you decide to put a concentrated amount of orders at the highest point, or if you scale into it and only commit when you're building positions and you have, for example, in a percentage, the best way for you to do it to minimize your risk is to take the allocated amount of risk that you are looking to use. So hypothetically, 100% of your capital, take 10% of the capital, then break that 10% down into quarters. So 25% of that 10% right there, 25% of that 10% right there, 25% of that 10% right there. You've now built in at least 3/4 of your position, and then you've got another quarter left to see if you want to add to it and catch the momentum to the downside. That's the safest way to manage your risk. Do not open positions and blindly go in 100x and hope for the best. You might catch the move, but you are risking capital and you are increasing the chances of being like these individuals right here, where they didn't pay themselves on the move to the upside. Okay? Now, going into the New York session itself, guys, what we've got to be mindful of is the UK session is all the way down here, and we are going to anticipate that the New York futures markets are going to react to what's happened across the board, all right? The general consensus is that there are going to be bumpy times ahead, and that maybe the Santa rally might not even happen because we are trading the macros of the marketplace. Right now, people are concerned. So that is going to be put into the charts. Any retraces to the upside, be very cautious about them, Okay? Make sure that you're aware of the 50 EMA. Be mindful. This is where they retrace continuation to the downside. Okay? Now, if we just consider Bitcoin's price action right now and look at this move right here, all right? This was a projection that I shared over to the patrons of the channel to get them to understand how price moves. That's all I'm interested in. If I can get people to understand how it moves, then they're not going to be setting themselves up and entering at the wrong time. Don't get it twisted. It's not 100% success rate. Don't get that in your mind. It doesn't exist in trading. None of it exists. But if I were to give you a system that guarantees 100% success rate, and I give you that system and I give it to your friend, you make 100% success of it, but your friend makes the worst of it and doesn't even win, what's the story? How can I give you two both a system that guarantees 100% success rate, one wins, one loses? That's where the mindset comes in. That's when you start trying to prioritize what reasons are you trading for? Are you trading to make money? Because if that's the case, get out. Because you will pay more trying to make money than you will focusing on the execution. Because ultimately, what is it that you're looking for? You're looking for the right time to buy and the right time to sell. I'll be frank with you. Buying and getting into a trade is easy. It's closing it. And that is evident with these bad boys right here. $4.86 billion worth of retail liquidity. Don't give it to him, man. Don't give it to the market maker. He can be in a drawdown for as long as he wants because he knows where he's moving price. Do you? I don't know where price is going to go. I can't look at a chart and say, I can assume, I can base it on a number of probabilities. We're making trading guesses, ladies and gentlemen. Educated trading, calculated guesses. No matter what way you decide to cover it up, okay? We are on the spin of the wheel. 50% up, 50% down. That is it. So if our odds are 50-50, why do 95% of traders lose? That is where the mind comes in. If you can't accept that you're losing in a trade, well, don't let the market make you realize that. Realize it for yourself. Because the market does have a beautiful way of humbling you. And trust me, I've been humbled many a times. I see the market do something against me, I cower away from it. I ain't fighting the market, no way. No hero trades, ladies and gentlemen. It's all about capital preservation. Check this out. This was a breakdown that I gave the gentlemen, ladies and gentlemen, in the market maker tier in the Patreon. And I was helping them understand the development of these candlesticks and what it is that we are looking for. How are we going to suggest that Bitcoin was preparing for a move down? Okay? I go into detail about it, and I go into each different time frame, 11-hour chart, to try and gauge the idea of what it is they're trying to do. And given that it was at this 50 EMA, and there seemed to be this lackluster behavior and commitment coming into the chart, my narrative was I wanted Bitcoin to go down. As we go into the lower time frames, we can see that this behavior right here is the actual journey of what I anticipated Bitcoin to do. But behind each zone, the sell stop zone, the consolidation level, and the zone of manipulation was geared at making the traders in the Patreon itself understand what to expect inside each of these zones. Now, when we go into Bitcoin itself, you can see that Bitcoin followed through with that narrative. They came up towards the sell stop zone, which happened to be the 200 EMA on the 4-hour time frame, which was the 800 EMA on the 1-hour time frame. The idea is to understand what they do at specific points before they get there, and your goal is to understand how likely, based on your commitment in the chart, are you going to see that play coming to fruition. That's the key to it. Now that we've got Bitcoin right here, we are asking ourselves the question, well, look, we've recovered the vector candle. Happy days. Now we're waiting for the retrace, and we're waiting to see if they do have the ability to bounce away from this zone. Remember the New York session, the Brinks box, do not do anything until 3 p.m. Wait for them to manipulate this zone, and then you'll know exactly where you stand with the marketplace. The first breach away from, we are at the range daily low for Bitcoin. So we've hit the lowest point in the range for the session. Naturally, we anticipate a retrace. But you want to be paying close attention to assets across the board. Be very careful with euro. Be careful with dollar yen. Dollar yen seems to be playing out very nicely. It is pulling back ever so slightly. And we've also got the idea of gold holding and consolidating. That's good news. Because if gold can consolidate, then that would naturally mean that traders are seeking the safety of gold because they're going to be running to commodities, which then takes me over to oil. Oil's starting to move up. And when oil moves up, we naturally assume that USD CAD is going to go down. And now USD CAD looks like it's preparing to go down. Okay? Moving on from that, ladies and gentlemen, I hope you've understood what I'm trying to convey, sort of like a little bit of a mindset discussion in regards to what's going on and what is likely to happen coming into the open of the New York session. All right? Waiting for the first hour to pass. So that's from 2 o'clock UK time, which in principle would be 9 a.m. New York time, all the way through till 10 a.m. is going to be the point in the chart where you sit back and observe the behavior. What are they giving you? What has happened beforehand? And how can you use that information to establish your appetite for risk? It sounds crazy, but the only way you're really going to learn this game is if you sit and look at the charts. Don't watch YouTube. Don't watch Twitter. Don't go on Instagram. Don't go anywhere. Because my perspective of the market is recalling back those years that I've sat and watched price. Now, each video that I do is designed to try and factor in those years behind my trading and try and give it to you so you can absorb it quicker, but more importantly, avoid the mistakes that I made. And I still make mistakes, guys. I'm no saint when it comes to trading. No way. I have to maintain that level of being humbled by the market at any day. You know, that's what it's all about. And the sooner you get into your mind that you want to try and see trading as systematically and as objectively as possible, then you're going to be in a better position to really zone out and understand what the market's trying to do. It's like, imagine a shepherd. He's trying to herd out all the sheep and guide them into a certain direction. Some of them might steer away. And that's exactly the same in trading. Your trade might go against you, but if the general consensus is showing that it's going to go towards that direction, if the masses are showing that inclination, then okay. You're going to hold your trade and allocate your risk. Quite frankly, guys, the more money that you are risking in a trade, the less options you have to decide whether to get out or hold. You decrease the chances because you are then factoring and triggering those emotions. You don't want your emotions to be triggered when you are dealing with the movement of the market. You want to base it exclusively on the structure of the chart, on the way the candlesticks are moving. Don't make a decision because you're down 20%. You shouldn't have been down in the first place 20% because that will tell me that you've risked too much. If you're down 2%, you've got room to sit back and say, you know what? I'm cool with this. Let the market show me the proof that this pullback is not going to continue lower. Because if it does go down even deeper, I'll be at a 7% loss. That's okay. I don't need to make that much back. I don't need to make a massive return like 8%. I only need to make 10% back. And if you can't achieve 10%, okay, why are you going to think that you can achieve a 20% return or a 40% return? If you're down 20% on your balance or on a trade that's costing you 20% of your capital, you need to make 40% to break even. Don't put yourselves in those situations, guys. Okay? Now, we are going into Wednesday. There are no news announcements that are due out. So it just seems like the markets are going to just trade the macros. Be mindful of retraces and any fast moves to the upside. Have yourselves a great day, ladies and gentlemen. If you want to learn more about the hybrid system, check out the Patreon. It's in the description of the video. But download the hybrid system. Make your way over to the Traders Reality website. It's all there for you. And there's a checklist on what you can do and how to download everything. And take advantage of the Wikipedia as well. We've got a trading wiki, a wiki trader, whatever it is, a Traders Reality wiki. And in that is packed with information regarding the indicators, how to install them, what various assets. And it's all been contributed by all the guys in the Discord. So mad love and respect to all the pattern watchers out there. Trade safely, ladies and gentlemen. Have yourselves a wonderful day, and I will check in with you all tomorrow. Peace.